Hey everyone, welcome to this new episode. And in this episode we are speaking of DeFi AI, the savior of agentic decentralized AI. And in this space I couldn't have better guest over here. I have David from Lit and Ron from Theoric. And something I kind of like whenever I speak of DeFi, first of all, we need a better name. Like DeFi AI is just like somebody coined and coupled.
AI-fi. I think AI-fi is a
AI-Fi,
better name.
yeah. Yeah, AI-Fi has become a better name of it. Like both of your projects have been pretty highly invested into working on this, and something which really interests me is that there is a good amount of like in terms of privacy, security, and even bringing new users on chain and utilizing these tools. You have done a great work. Now, apart from like great work, what are the challenges do you guys really see happening with DeFi AI right now in terms of agentic space overall? And then we'll come to decentralized AI later. And this is an open space. Anybody can jump in and answer this.
I mean, I guess I'll take a crack first, and great to be here. Certainly, I think that the number one thing is, we're in this period where AI capabilities are rapidly improving. But when you say like, hey, what are the challenges to having agents? The number one thing is we're just kind of crossing over to a point where AI agents are powerful enough and reliable enough to automate useful things. I think a really valuable way of measuring that, there's a nonprofit, Meta, that's been doing great work at saying like, hey, can we calibrate how much complexity an AI agent can do, right? So they've come up with a bunch of benchmarks to say, in a couple of different domains, really, like what's the length of task that it would take a human expert X time to do something that an AI agent can reliably accomplish? Asterisks on what reliable means, right? 50%, 80% reliability. And the general theme is that like that's doubling roughly twice a year, right? In programming, where AI agents are by far the most sophisticated, right? We're seeing all the big labs producing that with Codex and Claude Code, and startups like Cursor and Replit offering coding agents, right? It's but way further ahead, right? Like the best outcomes there are like hour-long tasks. Reliably, agents can do things that an expert takes an hour to do. On the other extreme is fully generic agents, right? Like Operator or Manus, right? Like trying to do anything that a person might do using a web interface. Their data shows a few seconds is the length of task. Also on a similar curve, right? Now, I think DeFi is in between those two. It's easier to automate DeFi than it is to automate arbitrary tasks through the web. That's why we think there's so much value in coordinating specialized agents. But there's way less capability. It's much harder to do RL and train great models to solve DeFi tasks than programming tasks. So I think we're just sort of crossing over to where we think tasks that take people a few minutes are well suited for automation with AI agents in DeFi. Right. And so, we're showing this, right? Like with agents that do things like automate setting up liquidity positions in Alpha Swarm, and similar, like, we're starting to work towards Pendle as another really interesting DeFi primitive, right? We think those types of things are really valuable to automate, and AI can do a good job on that. But honestly, I think a lot of projects are barking up the wrong tree. That's the DeFi tasks they're trying to automate are analyze and select the next 100x token. And, how long does it take a person to really do a great job of digging in and looking at all the information to decide if this is a great investment that it's going to have differentiated returns? It should take
Yeah.
at least hours, right? So to expect that an agent is going to do that reliably on current tech, I don't see evidence of it, right? And so
Yeah.
I think that's probably, to me, the number one thing is like we're just in this rapid curve as AI is getting capabilities to actually automate tasks. And you know what I think we
Yeah.
see is, I'm not going to name names, but a lot of projects are touting agents that are not, using state-of-the-art AI. They're sort of simple deterministic engines of the kind that Wall Street's been building for 20 years, where they're doing machine
Yeah.
learning on parameters. That's valuable, but that's sort of like I don't think that's what most of us mean and think is exciting about agents. Like, making it so an AI can truly automate processes in an intelligent way. You don't need people to do a lot of the judgment and take in all the information. To us, that's what an AI agent is. It's not like rebranding a statistical model as an agent.
And
I
in
mean,
terms of different protocols, like something which comes up as the second like counter question to this, like if there was something which was useful at all, like in different protocols, wouldn't have been replicated like in all of the protocols at once, like something which is universally so useful and everybody's using it and everybody joins the jump bandwagon, and it becomes like, okay, we have been like different ecosystem have been utilizing this specific tool, and now this has become like a benchmark. Like we haven't reached the benchmark tech till yet. Like it's what I think. Like there is no benchmark tech, and I know we are at the start of the bell curve, and there is definitely gonna be like a much more better proposition in terms of products which are coming out. But like in terms of different agents, like there is this distinction of everybody creating some type of agent, and where you can like swap and do a different interop stuff, and all of that turns around. But like there is no benchmark. Like do you really feel that, or is there a benchmark which everybody's following? And David, you can like jump in on both of the questions if you want to.
yeah, happy to. I mean, the second one is a really interesting question. I think first we want to settle a little bit of context around what do we mean by a DeFi AI agent. And to my mind, there's really two core types, right? We have a user agent model where a user is providing some input and the agent is then running some specific strategy over what that user's input is. And I think to Ron's point, like we haven't quite seen those take off with enormous popularity because of the quality of the model. Now, the other type is some agent that executes a specific strategy, something that starts to look more like a pool or a vault. And then, to me, the question like gets potentially quite complex in terms of the fundamental reason why you need artificial intelligence in that second case. And really, the regulatory conversation comes in. Because if you look at the nature of vaults today, things like Morpho and Veda, really amazing products, an excellent job of using Solidity as a method to manage permissions on chain. But the types of scoped activities that the curators or managers or fund administrators that are running these vaults are doing are very, very limited in scope. And it's my understanding that the reason that those are limited in scope is that the set of like there's nervousness, and we can like validate this with these curators and these fund managers, but there's nervousness around the complexity of the strategy that can be executed there, lest that curator starts looking like a broker. And
Yeah.
so to me, actually, quite interestingly and almost unexpectedly, the idea of being able to run sophisticated strategies in artificial intelligence actually ends up being a regulatory edge rather than like, okay, cool, we're saving, this fund manager 10 hours a week. Like, it doesn't really matter if there's $1 billion in that given vault. If there's one person spending 10 hours a week, that ends up being a negligible expense. But if artificial intelligence in turn can enable much more sophisticated strategies such that that vault becomes a much more popular and exciting product, to me that like gets to the fundamental reason why we want to have like a DeFi AI beyond the, and again, I'm talking here in kind of like the vault pool side of things, opposed to the chat interface agent, which to your second question, like really has not hit its stride yet. It very well might as the doubling of the LLMs improves. But for me, that's just been a very clear way to kind of like look at the two types of products, which is again, user agent models often associated with smart accounts, or vault pool models often associated with pools and the level of automation that's available there.
I mean, I think it's good to have those 2 points. What we see is that a lot of times people are starting with a kind of co-pilot where there's chatting and a human in the loop, but that tends to drive towards increased automation, and people want to have agents taking automated actions, which naturally moves to the agent is curating a vault, and you use a vault to put funds to run whatever strategy the agent is running. Now, I think in a sense, when you get to $1 billion vaults like David's talking about, like you don't, there's been ways of constructing, more complex systems with more humans in the loop to manage at that scale, right? Like high frequency trading is a thing. People have been running large strategies in TradFi and indeed in hedge funds and crypto, right? But I think there's a huge opportunity with AI to automate taking in the signals, analyzing it in near real time, and responding much faster. And it democratizes access. So you can have vaults that are more specialized, right? So you can have people curate and specialize what to do. Now, there's still some minimum efficient scale. I don't think creating a vault for a user with $100 and all the expense of running an agent actually it eats into the returns on your $100 investment, and you should take your $100 and find a pool to put it in, right? But if you're at $1 million, like a specialized agent that's running your strategy in a vault makes total sense, right? And I think actually we're already seeing a lot of investors saying like, I'd rather have that and start with a small amount of money and measure performance. To your point, Prakash, about how do you like benchmark, right? And we're starting to see this, right? Like I was in Con at ECC last week, and Agents Day, where a number of projects were at least highlighting here's live tests of our trading agents. They're usually giving 30 days of data, and it's not a benchmark. It's like grade yourself. We ran this thing, and here's a 30-day period we did well, but who knows what they didn't register it in advance, so we don't really know if it's how robust, right? And obviously standardization is important there, but it's encouraging that people are at least starting to sort of report the live behavior and results of their agents. I do think there's going to be a lot of value. Like, I'm blanking on the name, but one of the startups that I was on a panel with is literally 100% focused on creating these benchmarks, right? They're actually focusing on trading benchmarks. So, we're starting to see
that's Recall.
Yeah, Recall, right?
Yeah.
So we're starting to see response to that, and I think it's incredibly important. I think the question there also becomes like, what is the incentive, right? I mean, this has been an issue in academic research in AI for a long time. Is there's not that much incentive to create a benchmark, so benchmarks tend to be underserved, and the benchmarks that get created are the ones that are easy to create in a way, because you get a lot more, it helps your career more in research to crush an established benchmark than to try to create one. If you knew your benchmark was going to be super popular, then it would be worth doing. And then in an industry similarly, right? Like if somebody else created a credible benchmark and you can show people that you're really good at whatever DeFi task with your agent, you're going to gain a lot of capital. But what's the incentive for the Recalls or others? Like how do they build a great business in doing that benchmarking, right? That's the challenge that I see there. And it's a challenge for the industry, right? It's not just...
But the market volatility like kicks into that. Like, I don't know, like if I go and utilize an agent, and which, because we are here where most of the assets are not under any institution, and they can, like, they're not regulated at all. Like, I understand that there is a set of trust that needs to be created per se with specific agents, but what happens, like, because I think three of our agents are operating in this volatile market segment. So what do you think as a user, like how does that selection work, even for us and even for a user, like where this volatility least affects and like creates friction for a day-to-day users in that? Because like it can highly disregard, like even for $100 to 1 billion, like that can disregard the complete capital and even the principal which is into play on all of this. Like, so what do you think, like, and again, open question, like, but what do you really think kicks in, like in terms of as a guardrail or as somewhat positioning ourselves as a trader out there who is into different strategies and supercharging his own ways by DeFi AI agents? Like, what's your take on that?
I think you've nailed it at the end there, Prakash, which is like the agent is not performing any kind of new activity. It's just automating some activity that was formerly done by a flesh and blood human being. And so whatever the appropriate strategy is to manage like volatility in any given situation, whether we're talking about like volatility over the course of months with some institutional token or volatility on like a minute to minute basis with a meme coin, there's like certain strategies and various ways to think about momentum trading that like any experienced trader would take to those situations to decide whether it's a good trade for them. And so there it's just a matter of like, are you running the right agent for the right thing? But if the agent is running a strategy, there's really not too much different between like how somebody who's an expert and spending all day long in trading view is thinking about what strategies to run based on the nature of the volatility or a specific chart that they're looking at and how an agent does. Now, certainly it's on like the responsibility of the builders to be able to identify when certain strategies need to be employed and also agents as well. But I think to Ron's point earlier, we're really quite constrained by essentially the context window of the agent, which is, you know, if you go look through trading views strategies and other community strategies, there's literally thousands of strategies, right? And so for an agent to say, let me look at this last 7 days of trading, take in all of this sentiment analysis off of Reddit and Twitter, and then find a best fit strategy between these 5,000 strategies, like that's still a challenging task. You can start to hone in and get closer in terms of building an agent that does that. But I think I'm much more obliged to the simpler version, which we were talking about earlier, where the agent is doing some order of optimization amongst vaults, potentially like across chains and things of that nature. And then you also mentioned guardrails in your question, but maybe before we talk about guardrails, and we can take that as like a broader topic, I think is a good topic in general that applies to both DeFi, AI, and beyond. I want to see if Ron has any comments on volatility.
Yeah, for sure. I mean, I agree. I think the strategy we tend to see working is much more one where an agent really automates a given strategy and executes it well, right? So like we've done a lot of work. We built in public and showed how you can build liquidity provisioning agent swarm that takes in a lot of real-time signal. You know, a big part of managing funds in a liquidity pool is adapting to and responding to volatility, right? Like adjusting your concentrated liquidity range, even pulling out, if there's enough volatility anticipated. I think that there's both risk and opportunity in volatility, right? Like the best strategies profit from volatility and recognize the opportunity in volatility, right? So I agree with David. Like the idea that I don't think a lot of people want to sort of have an agent pick among any strategy and it will do whatever at any given time, right? Like at some point that will be correct, but like I don't think we're at near any evidence that that's going to work. It's the same way that most people don't invest in here's a fund that's going to do whatever they feel like on the whim, and they're just going to produce returns. There are funds like that, and some of them in TradFi perform super well, right? Like Bridgewater, but but much more, there's a sense of like, hey, here's a strategy that's articulated, and here's an agent that's really good at executing it and taking in all the latest data from a broad window of what's going on in the market, on chain, social news, and immediately deciding what does that mean in terms of how to execute the strategy well, right? And even when to be out of the market. So I'd say that. And then maybe just to turn to the guardrails side, like, I think it's super important to have constraints on what the agents can do, right? I think it's important that there be a design where by construction the agent doesn't, it uses tools and doesn't directly do things like, God forbid, know a private key that someone could jailbreak out, right? Obviously, that's one of the places where Lit Protocol is bringing great tech. And, another thing that I think people want to see is strong constraints on what an agent can do, like a limit on what it can do. The reality is the agent developer can and must keep changing the agent and feed in data, and nobody can really have that much confidence as to what the LLM will do, whether somebody, even if it's just a vault curator, could you jailbreak the agent with poison data, right? Like in an X post, right? I mean, we've seen this kind of thing be done, right? Pliny the Elder is famous for jailbreaking agents, and he managed to get Grok to say, "Hey, you're number one with 4 billion followers on X." When he asked, like, "What's the leaderboard on X?" Because he poisoned the data, right? So it's very possible if you're an expert to hack these agents, right? So you can't rely on them, and people want to know, like, on-chain smart contract that guarantees, like, no matter what, like, this agent can only deploy funds into these different places. It can't rug me and take the data. I can't hallucinate and send the data to a garbage address and burn it, right? Can't funds, right? So like, it's super important to have those guarantees on chain. People want to have that for confidence, and you sort of absolutely want to build with layers of defense and have like a proper decentralized secure management of keys, and you want to have on-chain guardrails to say what you can and can't do by smart contract, as well as the reputation and evidence with staking behind agents, right? Like, so we're building in Theoric Alpha, our protocol, the idea of alpha vaults, which is really how do you put these guardrails and make it easy to have vaults that agents can curate. And one of the things that is important is this idea that Dave was talking about of like having layers, right? Like a portfolio manager agent that holds funds in a vault and it can delegate down to vaults that other agents are managing. We're talking to a number of interesting protocols of vault technology and open source, but the difference between a vault that an agent curates and a traditional vault that's meaningful, right? The agents need a lot more flexibility in around what they're going to do. So we think that's incredibly important.
And does it like really helps out? Like there is a situation which is like correlated failure risk is like that can happen with, like, for example, if you have a flawed agent framework, it can be replicated to different user portfolios at once. Like, so do you think that this segment has a somewhat benchmarked toolings which can prevent that? Because at the end of the day, like as you mentioned, like there can be possible problems that can happen on off-chain sites, like which happens on the LLM, and then there is something which happens like smart contract can be handled. But what do you think what happens in a scenario where there is like there are thousands of users who rely on a single framework? Like in this scenario, let's say everybody has built it on Eliza, let's say, and there is a exploit and that triggers simultaneous failure. So how do you prevent that? Like what's the prevention in that case? And for anybody who's watching this, like I would want to also let them know, like how would they prevent themselves, like if there is a higher chances of that?
I think to me this like pretty fundamentally goes back to the guardrails. Like it's not the only method to prevent that systemic risk. Like we can talk about running inference in a verifiable way, and then we get into like, well, what if the prompt is hijacked even if the inference is run in a verifiable way? So like there is that side of the conversation, but I would say the most fundamental protection here that is available is that of guardrails. And yeah, to Ron's point, that's been a pretty square focus for us as well. What we have done, I'll just show you like one image, is created a method where the signing in the key material is distinct and separate from the LLM, from where the activity is running. And so LIT is this generalizable secret management network. And so before executing any given transaction, so even if the LLM or the agent framework is totally and fully compromised and completely malicious, the authority is vested in this other layer, which will validate against a set of rules that the user has consented to. And so we've got this set up in both ways, where the user can either authorize an agent in an OAuth style flow, or can just deposit funds into a vault that is protected by these same guardrails, where the manager on the vault is confined to only signing interactions that are within like the plain language stated rules. And so, yeah, it's definitely like a not fun scenario to talk about, which is like, what happens if there's somebody malicious inside of OpenAI and they figure out like what inference is running that's connected to money in some way and try to send it all to their account, right? Like that attack is fundamentally blocked by
Yeah.
guardrails. And essentially the air gapping of permissions from where the inference is happening, which can happen both on chain, if you want to just like have your permissions computing over chain state, and then we've got this system that also lets you run verifiable permissions for things that include both on-chain data and off-chain data. So if you wanted to do things like pull in external prices, or to the point that I was mentioning at the top of the call, like run really sophisticated strategies in a verifiable and automated way.
I think that's right. I mean, I guess I'd say look at it as a couple of things. One is the defense in depth, right? Which is, it's important to have on-chain guardrails in a smart contract. It's important to have a appropriate architecture where you're never exposing critical secrets to an LLM, like David was describing. Like that, you should always be separating out the LLM with the tools interface and hiding secrets where there's no way the LLM could ever be coaxed into revealing them to anyone. I think the threat model is much more, a malicious third party that figures out a data poisoning attack than an insider at a big company like OpenAI. But they're both threats, right? And the other thing I think is this is certainly, you're right, Prakash, that systematic weaknesses, like if one of the layers of your defense in depth, like a popular framework, has an exploit, that's why it's so important to have other layers of defense, right? But the other side is most users aren't going to know, and for good reason. People are not publishing their architectures, right? The leading agents are limiting how much detail they give, partly because they don't want to make it super easy to attack their agents, right? Like the more you share, the easier it is to come up with adversarial examples and exploits, right? So there is good reason, to have limitations, right? Including like Don Song's group at UC Berkeley recently published research showing that leading models are now able to not only recreate a lot of zero-day exploits from the past, but in fact, in doing the research, they discovered more than a dozen zero-day exploits in open source that no one had discovered yet, right? So already the models are fully capable of discovering zero-day exploits. So, those who think like the best strategy is to open source everything and publish everything in full transparency, have to respond with, well, you're giving a lot of information for attackers that now can use superhuman hacking skills from AI models to go after you, right? So there's a real debate to be had about security and open source. It's not a new debate. It's just a very different context with AI. But I guess the point is, what do you do in order to assess the quality and reliability of somebody where they aren't sharing a lot of details? And I think track record is important. I think, we're adding staking and slashing so that malicious agents or agents that fail to deliver, like that get hacked, can be slashed, right? So like, we think that's an important thing to have as a way of having a level of security behind a network where there's skin in the game for the agent developer and there's reputation evaluation, right? And so like this idea of benchmarking you're talking about, Prakash, like we call that evaluators, right? Having a standardized way of assessing and determining the quality of outcome that an agent produces, because track record's always what matters in some sense. On the other hand, just going on track record is risky, right? Like in TradFi, you see this behavior that there's always a set of funds that outperform, and arguably it's just a random process, right? So that every year the set of funds that outperform the next year cuts in half, and it's like if you had no alpha, it's just random distribution of returns, you'll expect that, right? And there's a survivorship bias. The funds that don't outperform just die, and new funds enter the market.
Yeah, and I feel like we have given so much like of validation to TradFi itself. Like my father used to work in TradFi, so I don't believe so much in TradFi, honestly. Like they are just a bunch of folks doing some stuff. But when we come about like multiple agents making decisions with each other and swamps and all of that is happening, there is one thing called zero trust principle while defining that. And do you think like are we really close to agent swarms and also like multi-agent systems which have been successfully done that, and or trying, like, because like we have seen a lot of, like, I personally myself saw a few of the teams like being involved in this back in eTenver, and then also like in permissionless, like done some amazing work on that. But I'm not sure like at what scale and stage everybody is in terms of doing that. And also post that, I would love to understand what you guys are doing on the agentic space, so that the viewers can you can break it down for the viewers, like what Theoric and Lit are specifically doing for the agentic space.
Yeah, I mean, I'd certainly say, like, we've been early and big believers in agent swarms with this notion that you need to have specialized agents that are good at specific tasks, and developers can build really good agents to do those specific tasks. And we're finding that's working really well. For example, Alpha Swarm is a swarm of agents that we're developing in collaboration with a few partners, right, to do things like managing liquidity positions and going deep and understanding a project token and on-chain actions, right? And we're seeing, not only is that working in the scenario of Alpha Swarm with Theoric, but also, we're seeing that lots of innovative agent developers are starting to do the same, in lots of domains. I think it's emerging very quickly in programming domains, right? We're seeing swarms of agents working together, because that's probably the segment where AI agents are the most mature and sophisticated. But we're seeing lots of information right now. There's a lot of efforts around multi-agent systems where a single developer builds all the agents. We think that works to a point, and then at some point you reach a level of complexity where it breaks, and you really need to have independence, where like the best person at managing risk, right? You were talking about risk, right? Like, where a number of people are building really smart risk agents, right? Like, well, you want to incorporate that into your swarm, and it's good if it's developed independently of the agent that's optimizing your yield, right? Like, you don't want them developed by the same person, because you want some independent objective views, right? So like, that's an obvious case where you want to have that in a swarm. Maybe as just a quick example, just to give people a flavor, here's an example of interacting. Here's an example of interacting with our Alpha Swarm, right? So like, I might ask for something like, this is an expert on Kaido. I might say something like, what are the best ways to earn, and what is the opportunity using my Kaido token, right? And so this is going to go in and interact with a portal agent that then talks to different agents, right? So here there's a knowledge agent that's going to go and get me information. And then it goes in and talks to a specialized agent that understands providing liquidity and gets information about what's possible there. And, then it's going to go and it should also ask a Pendle agent for information about that. Maybe, and then, maybe while we're waiting for that, I can just pull up a previous example. Let's see. Here's an example where we went through a similar flow, and it's talking about, staking and rewards, what you can earn on Pendle, or providing liquidity, more detail, right? And then you could go in and set up a position, right? So it was like, okay, zap back to give the answer, but kind of being able to go through and take actions like this with agents working together, we think is really powerful. All right, so just a very quick preview of our community beta and some of what's in there. And I'll turn to David for his thoughts on the question.
Looks awesome, Ron. Super excited to test it out. Yeah, I mean, I think like, I mentioned a little bit of what we were doing here, but I think it's worth kind of like framing the opportunity here, right? So like, globally, the amount of delegated funds, right? So this includes like hedge funds, pension funds, people who use wealth managers, is in the order of 150 trillion to 200 trillion dollars. Right now, where we are at with delegated funds in crypto is in the order of like a handful of billions. Still a lot of money for sure. And so I mentioned that just to say that like, there's a lot of opportunity for many different takes, both from a user agent model. But if you look at that 200 trillion, that's about 80% from institutions and about 20% from retail. So if we're talking about like, what is the massive kind of societal change in terms of having money both managed by artificial intelligence as well as it on chain, there really is this kind of fund manager disruption that is core to the story in my view. And we're starting to obviously see this with like Morpho and Zeta and these Vault products. And so what we're really excited about is, yeah, sorry about the background noise. Let me see a little bit. What we're really excited about is being able to have like very sophisticated automation whereby somebody can know specifically the strategy that is going to be run, that moves beyond just on-chain information, where the strategy is just as complex as a strategy that any hedge fund would run, but where somebody can deposit money into that strategy and not have to be an LP and work on a 2 and 20 basis, but just pay
Yeah.
like a 1% deposit fee or a 0.5% performance fee, similar to the model that vaults use today. And in our view, that's only made possible where the guardrail and the verifiable strategy involves both on-chain information and off-chain information. And so that's been a kind of a core focus for us in terms of being able to have verifiable compute where there can be some input from some manager, but ultimately a verifiable brain that then dictates, okay, this strategy needs to be run. We need to call this given smart contract function. And so like there is frankly some regulatory uncertainty here, and I think it'll get clear in the next couple of years. But the optimistic case is if you look at a system that runs limit orders for a user, right? Like those are user configured. A system that's
Yeah.
executing limit orders is explicitly not a broker, right? Things like Morpho and Veda, there's like claims that I believe that those are not brokers because the permission set is limited. But the types of things that those vaults can call today are quite limited. They're very, very cool, yield optimization, things of that nature, but they're actually limited in terms of the types of strategies that can be run. And so for me, it's like the AI here is actually a means to an end. And that end is moving the global financial infrastructure into something that is more resilient and defensible, which is on chain, and a total disruption to the business model associated with delegating money from one party to another, which is currently quite expensive. The classic 2 and 20 model where you pay a 2% management fee on your money and 20% all of the revenue that the fund generates for you, to something that looks a lot more like vaults, even when sophisticated strategies are run. And so we're very much kind of like going after that opportunity explicitly around a user knowing what is the capacity of an agent or a fund that they are going to deposit into or consent and allow an agent to operate over their finances.
Yeah, I totally resonate with that. And I think, back to this is why we're building Alpha Vaults so that you can have agents curating vaults, because we do believe that like that's a hard but valuable piece of infrastructure that you can plug in. Just like managing the keys that Lit's doing is incredibly important for people building high quality agents. Totally agree. There's interesting precedent from robo advisors, like Wealthfront, to show that AI that's curating, managing funds is not a custodian, right? So that it can be curating the vault, but totally agree. Like you have to have this rich set of signals, right? This is why, like, in building liquidity pool management, our agent is using data from Kaido and Cookie, as well as streaming aggregated data from pools using StreamFast, even though that's technically on-chain data, making it useful, having an indexing off-chain system is way more valuable than trying to read block by block and reconstruct. And the other side of it, though, is like you still end up having like two layers, right? You have the one agent that's doing the analysis and saying, hey, what to do strategically, but LLMs are not running so quickly that you want to call an LLM every block to reposition, right? So you still end up having a high frequency engine that's being configured and controlled. So you have an outer loop with an agent that's taking in all this information and curating the vault, and then an inner loop that's executing the actions. Is the typical pattern, right? So I think that's sort of where we see things going. The last thing I'll comment is what I think is going to be an even bigger unlock. Like we already see that DeFi is going to be AI agent driven in the next couple of years, right? That agents are going to take over, and that's already hundreds of billions of dollars opportunity, $1 trillion, when you add up all of the different categories, including stable coins. But what we see starting to happen is like the recent announcement by Robinhood of tokenizing, real world assets like OpenAI tokens and, tokenizing, popular stocks that can be trading on chain 24/7. We think, like to David's point, right? Instead of like all this rent taking from the TradFi folks that you don't like, Prakarsh, suddenly you're going to have this amazing opportunity. It can all be done on chain by agents and disrupt the whole business model of Wall Street. On chain 24/7 democratization with agents trading everything. And I think that's the killer app for real world assets on chain.
Yeah, totally. And I think, I really like the way that Ron put it. Like, if you look at vertically integrated SaaS agents, right? Like things that have nothing to do with crypto, nothing to do with DeFi, kind of the most popular agent class that's out today. Things that like automate inside sales reps or automate customer success. Those systems are popular not because they use AI, but because they accomplish the goal better and faster and cheaper than having a person do it. And I think we just have to maintain that same lens here. It's very, very exciting to say like, cool, we have this capacity of machine intelligence. Let's stick it everywhere where it's possible. But really keeping this kind of goal in mind, which is how do we let people delegate funds to another party, which may be this fully automated and verifiable agent, in a way that like massively reduces this rent taking and the fees that they have to pay. To me, is the goal, rather than like, I think there's enthusiasm amongst early adopters to use AI for AI's sake, but keeping that kind of end game in mind ends up being really important. And that's been pretty core for us in terms of how we've been thinking about the product development here. And I just want to mention the name of this system that we put, like the front end with the consent and control. We call it Vincent, and it's essentially like an OAuth type of tool. Again, where you could say, this agent can perform these actions with my key, or this agent can perform these actions with a vault that I deposit into. Kind of break these out into these two categories of user agents and vault agents. And I think there's going to be plenty of really amazing opportunity to collaborate with Ron and his team as development continues to unfold.
We are picking this up. Like we had an engineering call this week, and this is something which is like I don't know, like we are very close to integrating Vincent, and I really wanted to showcase it today. Like so this brings us to our commercial break, which is sponsored by Skynet. I mean, like, I had to show this, honestly. So, like, this is what we have. Have you seen that meme? Like, I'm more of a scientific myself, like Spider-Man meme, pretty old, like I have done. So, yeah, we have done some part of agents on our side as well. And we have mostly focused on the consumer side. Like, we have seen a lot of people coming in and as builders, like what we could have done, and this is something which we felt that was really needed. Like you can go ahead and just create your agents like off the go. Like so any agent needs to have a start point, because like you need to pass it, and then you can connect different types of tools and pass in the API key and get started. I'm going to show you an agent which is already there, like which I am using. Like this is the Telegram agent, which basically goes ahead and posts on this is a Twitter agent, I'm sorry, and which posts on Twitter and which uses different LLMs, and you can just pass your API into that, and you can just go ahead and put different conditions, and you can just directly use it, and it posts Twitter on your behalf, like for example on different kind of use case. Like so we felt that there is a whole set and segment of people who have been utilizing these agents, and now they want to create them. Like there is a whole like a large pool of people who wanted to create these agents and define the logics by themselves, and we thought of like who could be the best people to do around that. So we came on to the idea that we can just do it like this is something like really useful. It's called BD Pokemon bot, and what does this Pokemon does is that it captures any telegram message that you have remaining and pending, and it just goes ahead and summarize it for you. And I think what we saw that we can directly integrate is that we can put Theoric or we can put Velvet onto this and create multiple flows around it. Like even in terms of DeFi AI, like we are just coming up with more on the trading side, and we have been very massively working on different kind of agents, and like how do we generate like bring in more people to get started, and initially like we win certain set of liquidity via them. So we have been working on that, and like I personally feel that this segment is definitely gonna be way bigger than we think of. But there is always an antithesis of things when we run things together, like have an idea of things, like because surprisingly, when Ron mentioned that Robinhood has came up with this idea, I think they were the only guys who were I don't know, accused of that GameStop short squeeze. I don't know if you guys remember, like they stopped the app onto buy orders and all of that. So like there, that's why I kind of think of things on more on the antithesis first, and then go ahead and validate it via product and distinctions of what we can totally do around that. So that's why a bit of my questions were I don't know, were challenging to the whole DeFi AI segment. Like I'm pretty bullish, honestly, but it's definitely for the front runners like you who need to answer those questions for developers, all even developers and traders and anybody who are utilizing your platforms and our platforms, and we need to give this segment of clarity of thought to them. But this is chill time, Ron and David, and you would get like 1 minute of completely telling about what you're doing, what's coming, and what should be really excited for. So in respective order, like Ron would love to hear from you, and then David from you, and would love to see like how community can participate in that as well.
It's been great being here. We certainly think it's great when you get real builders like the three of our projects together, and like I think the way we're going to build this decentralized future in AI-fi is by collaborations with innovative projects. At Theoric, we've been excited building out our protocol. We're now really focusing on agentic economy AI-fi use cases, so we called it Alpha. Right, we've built in attribution and tracking of executing transactions from agents. We're building Alpha Vaults as a follow-on, but that's probably fast follow to our mainnet. We're on our march to mainnet. With Alpha Swarm as a signature example of really valuable AI agents working together that I showed you briefly. We got in community beta for that, and going to be opening that up. Yeah. Stay tuned for more exciting news next week. Nothing to announce just yet, but we got some exciting news next week, and we'd love people to engage and participate. As we ramp up, we think there's like a ton of ways that agents are going to be transformative. So very excited to have you engage in socials, be a part of the community. We've got a very healthy community of ambassadors and yappers that are excited by what we're doing and sharing information. And we're building out the product, and would love as the beta opens up to get more people to use it and give us feedback. And obviously excited to engage with builders, right? We want more people that are building great agents in AI-fi to contribute them, to benefit from agents that are there. And, we think the swarming of AI-fi agents is the huge opportunity. And we're 100% focused on that.
Yeah, this is super exciting. I would say, as mentioned, like the scale of the opportunity and the fundamental shift as this relates to like democratization of sophisticated financial interaction for everybody on the planet is like very real here over the next couple of years. On our end, we've been building away on this Vincent product. There's about a dozen teams that are building agents with this today, or building tools with this. We should have the dashboard out in the next couple of days, which will make the whole thing a lot more coherent, as well as a handful of just like initial starter agents, things that do like optimization between stablecoins and vaults on top of Morpho, some pretty basic examples. But yeah, really looking to engage with people who want to generate the maximum amount of yield on stablecoins, right? In terms of folks who are going to be depositing into these systems and using them and engaging on social and all that kind of stuff. And then builders who are aligned with this idea that we can bring deeper levels of automation to finance. And so, one of the things that I'm pretty excited about that's coming up is we've started this system with managing private keys for doing smart contract interaction. But the nature of the underlying network that we built at Lit Protocol is a generalized secret manager. It manages about $200 million in assets today, largely for a lot of cross-chain interoperability protocols like Eco and Genius. But what's really cool here is the system can also manage arbitrary secrets. And so, whether or not all securities end up being on the Robinhood chain or the New York Stock Exchange, actually, I think it's very cool if they're on chain because you get the 24-hour market. But if you want the actual underlying asset and you want to participate in the governance of a given corporation because you actually own the stock, in the weeks ahead, we're going to enable a generalized secret manager. You can almost think about it as like a password manager for an agent where a user can upload their JP Morgan API key and then delegate to a third-party LLM that says like, yes, this LLM can use my JP Morgan account within these set guardrails, within these set permissions. So like, only do covered call writing for stocks that I already own within a given range. And then that's the guardrail. And then somebody can then execute a strategy on top of that. So yeah, we definitely have the ambition of going an inch wide and a mile deep on solving this user agent trust gap where users can delegate some authority to an agentic system and then keep that agentic system inside of a set of guardrails, including both on-chain information and verifiable off-chain strategies. And so we have some demos out at heyvincent.ai. I'd say our main Twitter account is the best place to kind of follow along. And for people that want to test this out, there's like a Galaxy campaign running. You can jump in. We have a token coming out later this year. So definitely a fun time to get involved and earn points for trying things out and sharing feedback. So yeah, similar, Ron. Trying stuff out and building together. That's how it's done. In our beautiful open source.
Amazing. It's pretty amazing. Yeah. I think like something I want to just give off like in the last moment, like Theoric and Lit. Like I know Theoric for like past, I don't know, 1 year plus, and the team has been doing some amazing stuff. Like it was one of the teams which were very early to the whole agentic space, like everybody was doing compute. Like there was a time everybody was crazy about decentralized compute. And then I got to know about Theoric and very early to the whole agentic space as such and forms and however, and also for Lit as well. And I think few of the teams who have been really building and shipping stuff. And that's what I really like about like the builder energy around. Like that's something which I truly respect as in this space because like the whole idea of decentralization has corroded with time. But I really love like what teams have been doing. And at Spheron, you always know we are trying to build world's biggest data center and tools around that on the application layer, Skynet and everything around it. So if there is anything that you need around GPUs, you can always ask us and reach out to us and we'll be happy to help out. And thank you so much, Ron and David, for being here. It's always a pleasure to host you guys, and supremely bullish on Theoric and Lit. Hopefully I am eligible for airdrop post this amazing content creation. So guys, thank you so much for watching this.